region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong. So,
manage money, piling in.
Double digits higher.
At this point, we're in kind of uncharted territory.
there's a lot of money on the sidelines. So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Tuesday, September 16th, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you got any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here at December corn up 3 3/4 at 427. November soybeans were up 6 at 1048 3/4. And December Chicago wheat was up 4 3/4 at 529 3/4. We yesterday afternoon we got crop progress and conditions. Corn 67% in the good to excellent category. That was down 1% on the week, and still above the average of 57%. We're 7% harvested nationwide. That's against 4% last week, and right in line with the average of 7%. On the soybean side, also down a point in the good to excellent category at 63%, still above the 5-year average of 58%, and we are 5% harvested nationally there. 6% at this time last year, and 3% is the average. So nothing special on that front. Winter wheat, 11% planted. That's versus 5% last week, and just slightly below the average of 13%. Spring wheat almost wrapped up here, 94% harvested. That's up from 85% last week, and ahead of the average of 92%. We also got NOPA crush numbers out there yesterday, 189.81, which was better than expected and 20% higher year over year. So still solid crush numbers there. Oil stocks 1.245. It's the lowest level since December of 24, and that was also a miss on the estimates there on the low side. So we have seen oil up overnight about 88 in the December contract. I guess what we know to start the day, guys, there's some news that's kind of coming to light here. We got a TikTok framework deal out of the Chinese discussions, which, I think all in all signals at least there's a little bit of positive momentum. Nothing on the bean side. Secretary Ryland did tease more direct payments yesterday afternoon, so that's got many thinking that we're not close on the bean side, but these things are so fluid that we'll just have to keep an eye out. President Trump and President Xi scheduled to talk later this week to finalize that deal on the TikTok side. So hopefully there's more to come there. Today, the Fed begins their 2-day meetings. Much of the trade is expecting kind of a 1/4 point reduction in rates, so we'll have to see what comes out, and certainly their forward guidance for further rate cuts. Good morning, guys. Kind of a lot there, I guess. Justin, maybe just a few comments on the top, and then we'll throw around the room.
Yeah, Dan. Yeah, obviously everyone's optimistic that there could be a trade deal. So anything positive out of China, U.S. is going to, create speculation that, what if there's a phase 1 type agreement or something similar, that it would be certainly welcomed. Don't get me wrong. I think it'd be pretty friendly soybeans with, kind of the negative headwinds that we've been having with, zero Chinese business, basically. That being said, I don't think China's going to necessarily buy more beans. You still have a big global supply. Like I said, I think it'd be pretty friendly if it happened. But long to medium term, I don't know that you can force China to buy more beans than they need. I mean, they're a 105 million ton. It seems like kind of a mature soybean buyer to me. They've changed their rations over the years. Their population's in decline by most good estimates. They have a demographic problem. So I personally think you need another market. We've talked about a lot on the show, whether it's, renewable diesel or India, Africa, some other developing country really ramps up protein demand. I think China, we've seen that and enjoyed that growth for the last couple decades. And I think that story's kind of run its course, unless they get into, heavily into biofuels or some other, demand thing. But as far as just population growth and protein demand, it seems like we've probably seen the best of those growth years. So again, would welcome it, obviously. But I'm not sure it's a long-time savior for us. But I was surprised, I guess, that we settled down as much as we did yesterday, especially with such a strong close Friday, especially in corn. I mean, I figured we would actually buy it going into the close because of crop conditions. You'd assume they would go down with what we've been hearing and kind of the, kind of crappy ending that we had. And the fact that we knew that China, US were kind of meeting all week. So not surprised to see it back up overnight. Still at some really interesting levels, kind of battling the 100-day in corn. I mean, you've got some, pretty positive looking chart formations if we can kind of close above last week's highs or close stronger in the week, I would think. Some big areas, Ben. I don't know if you have more to add to it, but to me, it looks like kind of here to mid 430s. You start really trading above that, you'd have to say we're kind of in the starts of a bull market, or at least an uptrend that's going to cause more short covering, I would think.
You're muted there,
Sorry,
Ben. Yeah, there you go. You're good.
I would agree. I think it's a little bit of tough sledding here. Tremendous amount of resistance, 433 to 437. If you step back and look at the weeklies, we're just now getting to the 20-week average. Coincides almost perfectly with a 100-day. And then 440 is a pretty significant area, I think, for a number of reasons. Can we keep corn elevated here? And elevated, I say that tongue in cheek, right? I understand that these are still cheap prices and below the cost of production for most people. But it's been a nice rally. And what's the uncertainty on yields before we get that October number, which is actual field data? So, there's a lot here that could trigger. Certainly in the back of your mind, you got to be looking at interest rates, wondering, they get a little more aggressive there, which could be supportive to the whole commodity picture overall. So yeah, interesting to hear. We were talking before the show about people being disappointed with what their expectations were, and disappointed versus expectations doesn't necessarily mean a terrible crop either. It just means it's not as good as we thought it was going to be. So I could see us, kind of fiddling around here between, call it 20 and 35 for a little bit before anything else major happens. That being said, I look at the gap and what a struggle it's been to get that extra 2.5, 3 cents now 2 times. So just kind of open-minded to what can happen here. Dustin has mentioned before that the longevity of these negative margins can't last forever, shouldn't last forever. So we'll see how it shakes out. Beans are one. I think with this week that everything that's going on, the possibilities are endless. But we'll have to see something supportive, I think, from trade talks in order to get the next leg in both. Maybe it'll be a little bit of a wait and see approach.
Justin, you mentioned something I just wanted to go back to for a second, and I had a question. Has there ever been any discussion out of China in any regard to like a biodiesel program? That was an interesting point you made, like if they were ever go that route.
Yeah, I don't know. I mean, they already, they do some ethanol. They've, really ramped up any way to, produce more energy, solar, wind, nuclear. They're kind of kicking our butts when it comes to just, coal, 100 new coal plants, a ton of nuclear plants. I mean, any way to get more energy, they've been really ramping up. I don't know, the tough part with, there's such a big importer of soybeans, so reliant on other countries that probably wouldn't be the greatest policy for them. As opposed to us, right, where we have a big surplus, right? So it makes sense that we would use it here. For them, they'd be too reliant on imports. It's not like they have a glut of natural soybeans that they grow. So
That's a good point.
I doubt that would happen. So I was kind of just throwing out, how do they get more demand? And kind of hard from as an importing country. So, and even if they were to ramp up ethanol, right, that would cut down on bean acres even more. So they seem to be going more on establishing other trade partners so they don't have to rely so much on U.S. or even the Western Hemisphere, to be honest with you. So I think it has to come from other countries. You got Europe. Economy's been weak. Their population seems in jeopardy, on declining, and all the growth really is Africa, Asia, as far as population, mostly India and other areas. So, that's, I think, where global demand has to increase is going to have to be in some of those population, that are still developing heavily.
Justin, I got a question for you. Just playing devil's advocate to that. Like, obviously the Chinese economy has been weak as well. Like,
Yep.
if let's say we get, some sort of, I don't know what you call it. I don't necessarily agree with this, right? But some sort of normalization of trade with China, U.S., Europe, right? We get back to more of a normal trade and relationship with them, and just a rising GDP, in China, right? There is still a lot of people there, and their GDP per capita, right, is still relatively low as it is to the Western countries, right? U.S. And wouldn't that just drive protein demand, just as the residents, get richer, essentially, right? Driving, and this was always the argument for years, right? That, as people make more money, they want to eat better, right? They want to eat steak and they want to eat more protein.
Yeah, and I think we've seen a lot of that already. I mean, it could certainly continue, and obviously the U.S. is like number one per capita, and we're also fat, so we eat a lot of protein.
Yeah.
But I think the bigger story in China is the one China, one child policy for decades, right? And there's a lot of numbers coming out that they've been over reporting their population by hundreds of millions potentially for years. So did that mask some of that growth that you're talking about, that, the per capita went up dramatically, but it might even be higher than we think because their population might be lower than that. So some of the numbers, the forecasts for the next 20 years of what their population could look like, it's pretty dramatic. So you could still see the per capita go up and just the number of people continue to go down. It's kind of like here, right. Relate people to gasoline usage. But if you look at total gasoline usage in the U.S. continues to decline, more electric cars, all sorts of different reasons, more efficiency. So even as you increase ethanol blending, right, when the total gasoline usage keeps going down, that it's like you're fighting, two different forces at the same time. Whereas you go look at like the average kid per person, kids per person in some of these other developing areas, that's still, 4, 5, 6, just rapid growth. So I mean, if you had a slight uptick in those kind of countries, it'd be such a bigger impact, in my opinion, than China. Not that you still can't have, good growth in China, but I think that exponential growth that we saw for 20 years is probably plateaued or definitely slowed down dramatically.
Yeah, it's a pipe dream to think that. Yeah.
I just think to become the savior when you're trying to offset 20, 30 million new tons a year in South America, US, like you need a bigger demand base or growth, just my opinion. But
very good. Real quick, Dustin, now that we've officially set the MP price, I know that it's becoming a big conversation, and it always works out this way. Guys are busy, but you should take the time to look through this MP, MCO, some of these new policies, because they're, it could work for you, whether it be corn or beans or certain things like that. So just wanted to point that out. Dustin, maybe some thoughts as we're visiting with folks here on the crop insurance side.
Yeah, so you got, just like the March timeframe, you've got 15 days to sales closing on those products. And it is a unique year where we've got extremely high cost structures already, which could, continue to grow. If they grow, these products strengthen. If costs weaken into the spring, these products weaken. So it just depends on, how you want to go about hedging. The alternative is what? You don't hedge, or you try to go on the board and do something, or you go out to, just start making cash sales out forward. It's one way to just sign and go on hedging. And anyone that's been familiar with the margin protection products last couple of years, especially years like 2022, going into 23 when we had really good prices, this is like it was a good way for them to just sign and go on risk management. I don't think that's a bad way to look at it for this year either. If you're looking for ways to try to get something in place. Now, by doing it, there is opportunity cost, though. You don't get to choose ECO or other products in the spring that are, county-based. But I do think it's something worth noting and worth looking at. And with this rally we've had, I think there's a lot of focus on 26 again. Are we at profitable levels? Probably not with the cost structures for the most growers. I mean, if you look at just some of the early university numbers that have been published, we're not profitable. So what's your alternative? It's either selling into unprofitable numbers or some other type of hedging that still allows you to have upside. And this is potentially one of them. So.
Yeah, it was such a big subsidy too, Dustin, right? I mean, it's similar to ECO last year. It prevented, it was a cheap way to get a lot of coverage and prevented people from having to sell, even 30 days ago when the roof was, falling, sky was falling, right? When massive yields, everyone thought their crops were going to be huge. And you talked about, I meant to add this, Ben talked about, less than expectations, but it's funny how expectations grow as markets break, right? Everyone saw a tall green crop early August and be like, I think I'm going to have record yields by 30 bushels, because you kind of mentally have to justify the price that we're at, and then as prices rally and stuff starts getting brown, you get in there, it's like, it's not as good as I thought. So it's always hard when you get versus expectations versus last year or versus APH. So,
yeah,
but that being, to add to that point though, like there's a lot of people that wanted to that felt like they had to sell corn sub $4 because it's going to go a lot cheaper. And so if you have some of those products, it just keeps you from having to do that. So I think there's a big benefit to just, besides just the cost and the subsidy level, it's kind of like how you mentally feel like you're going to trade these markets if we stay in really tough times. So I think that's a big factor, even if, insurance isn't well above cost of production or above cost of production, more years than not, it's really not. It's not that you can go buy insurance and guarantee a profit.
It's been a lot of years since
it's really important to see mentally how you handle these markets. I think there's a big value to that. So
very good. Yeah. And as always, give us a shout. We'd love to visit with you, your individual operation, see if this is something that you should be looking at. So just give us a call. We'd love to visit with you. Ryland, real quick here. Feeders and fats got back all the Friday's losses to start the week, and it was a pretty quiet start for hogs. What are your thoughts here this morning?
Yeah, no, it was a nice little bounce back here. I mean, obviously the moving averages are going to be kind of the big pivot points right now, but in the past is what we've seen on this rally. These have been some of the better buying opportunities that we've seen. At this point, we held support. The 40-day moving average closed over the 25-day. Seems like there's been a lot of just anticipation for headlines without any headlines kind of making it in the market the past 2 days, and it just seemed like there must have been some kind of risk off on Friday, and then they put it right back on. So overall, just the news today, nothing crazy coming into the day. Had mixed box beef. You had choice is still slipping under the $400 mark at $398.53 down $1.50, but select was up as well. So it just seems like the market's going to be waiting to get a full kind of scope of what cash is going to be setting up for this week. Wouldn't be surprised to see more of the steady-ish kind of bids coming out here, especially with the support back in the board. So just watching for some of that. And on the hog side, very narrow kind of inside trade there. Looks like market seems to be waiting for something. Maybe there's some anticipation for something to come with some kind of trade deal at the end of the week with China. But overall, it just seems like cash market bellies and carcass starting to kind of overall kind of flatten out, if not drift just a little bit lower on the carcass side. So bellies were down about 334, but I think the market's really going to focus on cash being up at 105, so almost 106. So I think just overall, it just seems like we're not seeing this big seasonal decline that we're seeing. It's more just kind of flatlined. So I think there's going to be a little bit of caution kind of going ahead, especially if there is going to be some kind of announcement maybe into next week regarding the ags. But haven't really heard anything about that. No indications yet on what that could be. So just kind of waiting and seeing what cash market kind of shapes up to do today.
Very good. Appreciate the update there. We just came into the open here. We got December corns up 3 3/4 now at 427. November soybeans are up 8.5 at 1051.5 is the last, and December Chicago wheat is up 5 at 530. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.